Imagine for a moment that you started investing in 1985. For the first few years, your money only grew until the famous Black Monday, also known as the Monday Massacre, happened. Wall Street suffered the biggest daily crash in history, affecting millions of people. Until then, your friends probably thought you were a genius, but now they insist that you sell your shares, yet you ignore them. Over time, the market slowly recovers until the Nasdaq index plummets nearly 10%, driven by technology and in particular the internet. Traders and investors are in shock and your friends beg you to withdraw your money, saying things like, "It's time to lock in your profits before you lose everything." But you stand your ground, and things start to look up again until you are surprised by one of the most impactful events in generations, with enormous consequences. Little did you know you were about to embark on the adventure of a lifetime until the global economy contracted 3% that year, the worst recession since the Great Depression. It certainly looked like the end of the stock market. However, as things reopened, the market soared 27% from its lowest point, setting new records. What an incredible twist, right? Detail. This happened to several resilient people in the USA. In recent years, the return has been 11.23% per year. If someone invested just $250 per month during this period, they would accumulate $1,845,218, a return of over $6,000. But believe me, many people have invested much larger amounts than that. Now you understand the power of investing, and I think it's time to dive into the details. It's amazing how many people talk about investments, but don't show how to do it in practice. The process is simple and easy. You can start investing in stocks from your cell phone. Remember, this video is just suggestive, to give you a direction to take your first steps. Before you start, make sure you have an emergency fund of 3 to 5 months of your expenses. The first step is to open an account. Many people get stuck at this stage due to the variety of investment platforms and account types, but believe me, it's simpler than it seems, especially now that everything can be done online. In the past, people had to call their stockbroker every time they wanted to buy a stock. One suggestion is the Trading 212 app. The account you open must be a tax-advantaged account. Opting for an investment account that exempts you from unnecessary taxes is a smart choice. In the UK, we have stocks and shares ISAs, while in the US there is the Roth IRA. In my opinion, the British option is much more advantageous as it allows you to invest up to £20,000 a year without paying capital gains tax, and you can withdraw your money whenever you want. In contrast, Americans have to wait until retirement and have a much lower limit of $6,500 per year. Feel free to use whichever app you prefer. The next step is to deposit some money to start investing. Most apps make this process very easy. Now, we need to plan a winning strategy. The first thing to remember is that investments fluctuate, which makes it difficult to pick individual winning stocks. That's why I prefer to invest in all of them. It might sound crazy, but think about it with me. If you've ever listened to the radio or used Spotify, you're familiar with music charts. The better songs do in sales and downloads, the higher they climb on the charts. On the other hand, if a song loses popularity in sales, it falls off the charts. Investing in an index fund is much the same thing, except instead of songs, we're talking about companies. Let's take the S&P 500 as an example. It's a list of about 500 of the largest public companies in the US. Companies like Amazon, Google, Apple, and Tesla are like the stars of the music charts. If one doesn't do well, it runs the risk of being removed from the list. The interesting part of an index fund is that with just one click, you are not investing in one or two companies, but in all the companies on the list. So if one doesn't perform well, your money will be protected because it will be distributed among all of them. How can we put this into practice? We need to automate our long-term investments. Automating your investments this way is a great idea because you can set it and forget it. The value projection is incredible as it shows how much money you can make based on historical averages. Of course, when investing, you may get back less than you put in as investments can go up and down, but it's still a great way to get an idea of how much you can earn with data-driven projections. For example, if we invest £250 a month for 31 years, you will only have invested £94,000 of your own money, but your portfolio could be worth £1.14 million. If we extend this to 40 years, the portfolio could reach £3.56 million. It's worth playing around with these numbers because it's quite motivating to see how much money you can make by investing relatively little per month. And for those who comment on inflation, as long as you are investing and not just saving money in a bank account, inflation is not something you need to be overly concerned about. Additionally, I increased the amount I was investing to keep up with inflation. Now let's pick some individual stocks. An important suggestion is that beginners should not worry about picking stocks. I know many of you will try, especially after seeing people make millions with hot stocks like GameStop. There are basically two ways to understand what is happening in the stock market: technical and fundamental analysis. Day traders focus on the technical side, analyzing price charts and patterns, thinking they can predict stock movements just by looking at fluctuations. On the other hand, the important thing is to be a long-term player. What really matters is the company, the finances, who is in charge, and how well-known the brand is. I believe this is where the real key to predicting a stock's long-term success lies. Therefore, it is very important to analyze income statements, balance sheets, and cash flows. Remember, investing in stocks is a long-term endeavor, at least 2 to 5 years. The magnifying glass icon in Trading 212 makes finding stocks extremely easy, offering multiple lists such as big tech, popular ETFs, banks, and most purchased. There is so much more to explore when you have some time. You can also go to the social feed tab and see different pies created by other users, which you can copy with a single click, without having to search for the shares yourself. On the stock page you can see the price chart, and by scrolling down you can access all those important financial documents. What's stopping you? If you invest a fixed amount every month from the age of 25, in 30 years, you will be in a much better position. If you wait 10 years, see the difference it will make to your growth. It's absolutely stunning, so start young. If you have a diversified portfolio of index funds and continue to invest gradually each year, even if there is a stock market crash, historical data shows that you should be able to weather the storm, as other investors have done. If you want to know why net worth grows exponentially after $100,000, check out the next video. Be sure to subscribe to the channel if you want to increase your wealth.